Hello and welcome to Vox Markets. We've got the Xtract Resources mob in with us today, starting off with the Executive Chairman, Colin, and we have also Jeremy Reed, who is Project Manager and Director at Xtract. We've got Dr. Quintin Hills, who's a Project Geologist, and special guest today, in addition to the previous time, we've got Alaik Kubra, who's a modeler. I'm sure he'll tell us what modeling means in this context of geology and mining and everything else. But just start off with the executive chairman first, because he's obviously the most important, or thinks he is. How are you today, Colin?
Thank you for that, Zach. I think you got that dead right. I'm good, thank you, and I hope you are too. So if I'll kick straight into it, if I may. We put the announcement out concerning the modelling that we've done. It's been very comprehensive, and it's been based on the old York resource. We've got to put some of the holes in the last program got some effect, and of course where we're going has got even more effect. The holes that we'll be drilling. We've done a stack of geophysics, as you know, and we've announced those geophysics that we've gone along life's way. And I'm pleased to say that the results of the modelling, the targets that the geophysics have generated, there's some coincidence which will bring, by default, in actual fact, gives us very much promise, very much open, very much confidence in there being an extended open pit, more of the same, about the same depth. And for once nature's worked for us, the fact that this porphyry is inclined as opposed to vertical, therefore getting depth very, very quickly, being inclined gives us a very strong chance of producing a big open pit. You've seen the numbers, you've seen the start point. It's the basis of our modeling now. And so, summarizing it, we've got the opportunity to extend our pit, much more of the same. But the benefit, and it'll come hopefully in this presentation, is that will enable us to have a full infrastructure on surface, a plant which is paid for, tailings dams which are paid for, everything which is paid for. And then any sort of deeper mine would, in actual fact, attract its own incremental capex and its own variable cost. So a very nice model is developing, Zach, but over to Jeremy to explain, not to explain, I guess to fit it all in, Jeremy. I think that's what we want to do. Tie up what we've been doing, tie up the modeling, both geological modeling and financial modeling, and hopefully let's leave our audience with a positive thought on exactly where Racecourse is going.
Yeah, okay, thanks, Colin. The financial modeling that's been released today is based upon the JORC resource that has been published for quite some time now. It's 71 million tonnes at a 0.3% copper cutoff. And that modelling, that resource doesn't include the drilling that we did in what we called our phase 1 drilling at the Racecourse prospects, which was done at the end of last year and early this year. And now we're into our second phase of drilling, which we'll take you through in a second. So basically, we wanted to get an idea and say, okay, out of what we have right now, the 71 million tonnes, what does that give us in terms of an open pitable resource? And one of the things that came out of that modelling was that it basically takes all of the available resource, the 71 million tonnes, and that's at a 0.3% cutoff. But one of the things that came out of the modelling is it looks like it's going to be economic down to about a 0.15% cutoff. So in this open pit, there's many more tonnes than the 71 million tonnes of the JORC resource, because it looks like we'll be able to extract it down to lower cutoff. So it pretty much takes everything that's there at the moment. And the financial results sort of show that for a 20 million tonne per annum operation, the open pit will pay for all of the capex for that size operation. So for what is a relatively modest resource right now, that's a phenomenal result for us, is that we pay for all of the capex from that pit. And now what we're charged with doing is going out and extending the resource. So that's was the objective of the phase 1 drilling that we did. And we got, you know, an intersection there that was nearly 1,000 meters long of continuous mineralization in the first hole that we drilled in phase 1. So that gave us a lot of confidence that we're going to be able to substantially extend the resource. And now we've launched into our phase 2 drilling. And as Colin said, you know, that's based upon the learnings from the phase 1 drilling we did, quite a lot of geophysics that we did in terms of an induced polarization or IP survey. We spoke about that last time, but we showed some of the results of that and the impact that that has had on where we're targeting our drilling. So the objective of this phase 2 really is to take that resource and get it up to, you know, 3-4, in excess of 400 million tonnes. And, you know, we're going to do that program over the course of the next 6 months or so. And it's now underpinned by some solid economics for an open pit. And we understand what we have to deliver in terms of increasing the overall tonnes of the resource. So that's the sort of background to it. So we might hand over at this stage to Quintin and Alaik and give them control of the screen. And we'll start with bringing up the current state of play in terms of the historical drill holes and the resource and the size of the open pit, just to give people good visualization of what we have potentially and what we're doing. So if you guys can fire up the model, we'll get into it.
Okay, Zach, have you shared the screen? The host has to enable the screen, Zach.
I've done the multiple participants can share simultaneously.
Okay, yep, so go share screen. Yep, open the model.
And before we get into it, Quintin, if Alaik tells us a little bit about what he's been doing, and as Zach said earlier, just what a modeler does and the kind of person a modeler is and his specific expertise, that might help our viewers.
Yep, Alaik? Yep. You want to tell the viewers about what you do? So Alaik is a resource modeler. So what he does is he takes all of our data that we put into 3D, and he's the one who builds the actual three-dimensional model. Not only that, not just the data that we generate, but he also extrapolates that data and allows us to build the models that we then go and test with our further drilling. So what you're going to see now, and can you see the share screen now?
Yep, it looks good.
Yep, so that's an aerial photograph of the racecourse area. The racecourse creek runs right through near all those blue dots. Those blue dots are all the historic drilling in the area. A lot of those are quite shallow holes. And yeah, that's the main area, the main racecourse prospect area. Can you turn on the planned holes?
Yep. Yeah, just adding. So the aerial photo are draped on the
topography.
Yeah, topography. So it show you the contours. The contours of the topography as well. Yeah. So if I turn the that's the red dot that what our phase 2 drilling drill hole plan.
And as Jeremy said, those holes are planned to test extensions of the mineralization. They're also planned to test areas internal to the area we already have defined in a resource, but areas where we think higher grade mineralization. So last time we spoke, we talked about a high grade crown that we think is the key to the higher grades of copper and possibly gold in the area. And we've really targeted those areas in this next drill program. Now you can see this is the drill holes in 3D now below the Earth's surface. And you'll see the copper grades shown along down the drill holes. You also see now Alex just opened the resource model. So that's the original resource model, the 71 million tonnes at about, I think it's about 0.4 copper at a 0.3% copper cutoff. That's the overall geological mineralization wireframe. It's not the mineral resources cut off inside that. So that's the overall mineralisation, and it includes a lot of interp, obviously, into areas where we don't have drilling right now. So you can see there, you know, in the very northwest, which is to the left-hand side of the screen, the mineralisation, there's very few drill holes in there. That's where we targeted our first phase drill program, into the deeper parts of that, where we thought the mineralisation was plunging fairly steeply. Now we're thinking that it possibly plunges a little bit shallower, and we're targeting some shallower mineralisation, which obviously would be hugely beneficial for an open pit.
Yeah. So Alaik, what we might do is just turn off the historical drill holes, because the resource that you see there, that shape, is based upon all the historical drill holes. So now that's what you can see is just the drill holes that we have planned for our phase 2 drilling, and some of them are within the resource, but the majority of them are looking to extend the resource to the south east and to the northwest. So that's what we're starting with, and the financial modelling, which Colin mentioned at the start, is based upon that model of the mineralisation. So now what we're going to do is turn on the open pit, which was based upon the financial modelling, which got announced today. And also, I think it's good if we can turn the aerial photo back on as well. That helps put everything in context a little bit. Yeah. So while the aerial photo is loading, that open pit there, you can see that it pretty much takes the entire part of the resource. The current resource would be extracted in that open pit. It's about 650 meters deep, that projected pit, and pretty much all of the mineralisation produces a positive cash flow. So that's a really awesome result for the start of this project. I mean, it's still very early days for this. You know, we've done one phase of drilling, and we're now getting into the second phase of drilling. But yeah, hopefully that gives people an idea of the size of this thing. You know, it's about 1.3, 1.4 kilometres long, 650 metres deep in its current phase. Now, the other thing that's important is we've spoken about the high grade bit of it, and what Quintin and Alaik have spent a lot of time on is really trying to interpret the geology. So the idea is, you know, where are the better bits of this? Where are the higher grades? Because that's what's really going to drive the overall economics of the resource. And so they've put together a model of the high grade part of the resource. So we'll just turn that on as well, so you can see where that is. And a lot of this follow-up drilling is based on testing that high grade part to the resource. So we'll just wait till that comes up.
Yeah, we will see now.
So it might be a stupid question, but is it you know, we've got an open pit there where the costs are relatively low. You seem to have the sort of the concentration and the focus of the asset anyway. Does it particularly matter whether you're in one area or the other? I mean, couldn't you just sort of start at one end and go to the other? I mean, as I said, it might be a stupid question, but
no,
is it a rich enough resource? Is it a rich enough resource that it doesn't really? I mean, you know, you'd like to be in the richer veins, but does it matter that much?
It does actually, and what the financial modelling guys did, and the open pit modelling guys who we got to do this, they actually produced a model which has got 2 phases to it. So the first phase is really concentrating on the high grade bit of it, which is what you can see at the moment. That solid shape is the interpretation of the high grade section of the resource. And so the actual mining schedule, which was estimated from this, takes that out first, and then there's a second phase that basically takes out the rest of the mineralisation. And
does that mean that anywhere within that, let's say, calling it a super, it looks like the shape of a super yacht, right? Anywhere within that super yacht, if you start drilling, I mean, you'll come up with a decent return, and that's a big area, obviously.
Yeah, look, that's what we're testing at the moment. You can see there's quite a few of those red dots there, our drill holes. Alaik, just turn off all of the historical holes if you can, just so people can focus on our drill hole. So yeah, a lot of our drill holes are testing that high grade bit to try and see where it extends to, and we want to get a better idea of the shape of it. Particularly.
And so what is that? Is that about a kilometer by 300 meters, or what sort of size is that particular shape?
It's about about a kilometer or so long, that shape, and the overall, there you go. So
some of those outliers, Jeremy, aren't particularly clear. So what would be, if the geophysical representation and suggestion comes true, what could be the ultimate 1.3 could go to what sort of distance do you think?
Couple of, maybe 3 kilometers long. I mean, what that shows at the moment, so we're now looking at a long section through the earth, and you can see that the open pit in the middle, and then you've got Alaik, just turn off the geophysics again, So you can see the HighGrade model, and it extends now a bit below the pit. So this is a new model we've put together literally in the last week or so, and it suggests that the higher grade mineralization will go a bit deeper than the open pit. So there's potential there to extend that open pit at depth, and also into areas on the right-hand side of the pit where you can see there's a reasonable amount of projected high-grade mineralization, which will sit below the pit. So we should be able to extend the pit to the south. Now, what we're going to test is over 3.6 kilometres of strike length, and you can see all of our planned holes there at the moment. Now, Alaik, can you turn on the resource model as well as the high-grade model, because there's a point there that's worthwhile making. Okay, so what we've just turned on there is the overall resource model plus the new high-grade model that we've put together. So if you sort of twist it around, you can see that the higher grade part of the mineralization actually now extends beyond the boundaries of the current 71 million tonne resource. So that's a very good outcome for us. It suggests that, the better grade extends beyond the boundaries of the current resource. And you can see that we've got a number of drill holes planned to extend that high grade zone at depth, but predominantly north and south as well. Now, the other important tool that we've used to plan this drilling is this IP, or induced polarization data. And if Alaik, if you can turn that back on. So, okay, so what we see here, what Alaik's just turned on is a conductivity map that we calculate from the IP data. So IP gives us conductance, and it gives us resistivity. And what it does is it tends to map out the overall alteration that sits around the higher grade mineralization. So in these systems, as Colin's spoken about before, they've got different layers to them. So you've got the outer zone and the inner zone. And the inner zone tends to have the best mineralization, but the outer zone is this overall envelope of mineralization, and where there's a lot of pyrite alteration. And that pyrite alteration responds very well in the IP data. And what the IP data suggests is that the resource probably isn't or the mineralization isn't as deep as what we expected, but we also get some very strong anomalies to the southeast, which is on the right-hand side of that screen at the moment. And that was quite unexpected, because we knew that the mineralization extends to the northwest from the drilling that we did in phase 1, but we weren't expecting to get this very strong response to the southeast. And so now we've got, where Alaik's cursor is there, there's some very strong induced polarization responses in that area, which we are going to go and test. So we see the mineralization.
Can you show the image that over the current pit that we're planning, Jeremy? Can somebody circle the geophysics there?
Yep. So just turn the pit back on, Alaik.
Yep.
You see that? To me, that's a very compelling slide, you know, for the layman, Jeremy.
Yeah, look, it really shows a couple of things. I mean, with the mineralization within the pit, you see a good correspondence between the mineralization and the response in the induced polarization data. So we know that the mineralization produces a good IP response. And so then we look to the southeast, and if you look at the scale of that thing, those two anomalies outside of the pit to the southeast, down where Alaik's got his cursor at the moment, that's the same sort of length as that open pit. So you can see if those IP responses represent mineralization, you know, you can potentially see this thing can double in size pretty easily. And it also extends further to the northwest as well. There's a few anomalies to the northwest, which we're going to put some holes into up there as well. So we're quite confident we can extend it to the northwest, and probably not at the depths that we expected. And anything less than 600 to maybe 700 meters should fit within the open pit. So, you know, it's quite a deep pit. The other thing that is really interesting is not only do we have this potential to extend it significant distance to the southeast, but on through where the main part of the resource is, the induced polarization data came up with two anomalies, and we might just want to zoom into the pit a little bit more, Alaik, so see if we can show this. So the mineralization itself produces quite a strong IP response, which is on the western side of that open pit, through the middle and the western side of that open pit. But on the eastern side of the open pit, there's some strong IP responses there as well. Yeah, in through that region, through the center of the open pit. Now, there's very little drilling there, and we don't know how far that mineralization extends on the eastern side of the pit. In the financial model at the moment, that eastern side of the open pit is pretty much all just treated as waste. So it's going to be mined anyway, and it will just go to waste. But if we can confirm a parallel zone of mineralization on the eastern side of that open pit, well, that will substantially positively impact the economics of it as well, because all of a sudden you'll have material which you'll be getting positive cash flow out of, whereas at the moment in the financial model, it's just treated as waste. So that's an area where we've got some holes through the center of the resource, which we're going to test as well. Because if we can convert some of that area, which is currently waste, convert that to mineralization, you know, that's a really free kick for the financial model, because you're going to mine it anyway. And if you can produce cash out of it, as opposed to mining waste, that'll be hugely beneficial. So I guess there's sort of the main components of what we're going to do with this drill program is test the high grade zone and the extensions of it, test this area to the southeast where we have this, you know, incredibly strong and quite strike extensive IP anomaly, which has never been drilled before, and then test for this potential of a parallel zone of mineralization, which currently would fit within that open pit. And those are the three main objectives of the drill program that's underway at the moment. And
all right, can I just sort of cut in with maybe the takeaways for the layperson and investors, etc. I'm presuming that overall this is a pretty significant asset, even on a world scale. This is a pretty significant one. Second, I'm presuming that the market, although it was getting very excited in the first quarter of this year, it hasn't, you know, that was like the surprise. It was caught off guard by the whole Bushranger experience. But now here you've got in sort of graphic detail that you have potentially, you've not only got one sort of open pit, you might actually have, well, you might even have three if you're lucky. It's at least two, but possibly even more than that. And so is that actually sort of out there yet? The sort of additional bonuses that you've got there?
I don't think the market fully understands the potential scale of this thing. I mean, when you look at that and you think, well, that pit might double in size or maybe triple in size in a northwest southeast direction, there's a lot of upside potential in that resource there, and a lot of it's at relatively shallow depth. And the results of this second phase of drilling are going to be key to confirming that. But the potential that we see in this thing is enormous. I mean, it's already the largest undeveloped porphyry copper through this part of central New South Wales, and undoubtedly it's going to get substantially bigger.
Right, and in terms of the time frame now, I mean, as we always know, investors are particularly impatient. You've got everything sort of in graphic detail there, so it's really a matter of just the discovery phase. How far into the discovery phase are you? Sort of 60%, 80%, or is it what's the situation there?
Oh, we're well past the discovery phase. I mean, with the financial model that underpins what you're seeing on the screen at the moment, that open pit is really quite sophisticated. I mean, it's nearly a pre-feasibility study level financial model. I mean, it's predicated on an inferred resource, but yeah, it's a sophisticated financial model. So we're a fair way advanced down that path. I mean, what we now need to do is go and test these targets and upgrade the financial model based upon a new resource. And the drill program has started. We're well into the first couple of holes. We've got 2 drill rigs on site, drilling 24 hours a day, 7 days a week, churning out the meters. So we'll have a very regular stream of announcements and results coming out to the market for the next 6 months. And yeah, we're pretty close to finishing the first 2 holes of the program. Overall, it'll probably be somewhere between 25 and 30 drill holes for the entire program. But yeah, we're getting through them pretty quickly. I mean, things have started up really well from an operational point of view. So yeah, pretty soon there'll be a really regular stream of information coming out.
And so it's relatively, I'm looking at the bullet points here, it's relatively short time frame now in terms of getting to your goal. Large resource, market hasn't quite anticipated yet. Obviously, it's open pit, which is much cheaper, and it's on a significant scale as well. Those are the sort of the bullet points at the moment.
Yeah, I'd like to add, and I know that the market will probably jump when Jeremy started giving dimensions and 650 meters deep. But if I recall, Jeremy, I think the stripping ratio is 4.3 to 1.
Yeah, that's right.
And that is very, very good, Zach. You're going down 650 meters and you only end up with a very palatable, very acceptable stripping ratio. And as Jeremy says, if he converts that waste to ore, the stripping ratio gets less. So, that's a massive plus too. That really works for us. And of course, this program, this phase 2, this first part of it, Jeremy's first part of it is 8,000 meters out of what is a 20,000 meter program. So what happens next, Zach? Obviously, if the results are what we want, we may start infilling. If we outline the big pit as we put it, then of course we might do those deep drills, because again we've got more good geophysics, and then of course we'll be testing foot rot. So there's a plan. I think what's important to me is that from phase 1 into the independent modeling into phase 2, we've got the immediate mission of the pit, and then we've got the deeper ore. So there's a real mission going on here, Zach, and it's not going to be the death of the 1,000 lashes either. We drilled, Jeremy, we expect to turn around our drill results every assay results around about 5 to 6 weeks. We're on that sort of timetable now.
Yeah, from the completion of a hole, about 5 to 6 weeks, and obviously, you know, we'll be completing a hole every week or so. So, you know, once we get up to speed with the assays coming through, you know, there's going to be assays coming out, drill hole results coming out to the market, you know, every, you know, 1 to 2 weeks for the rest of the year.
Okay, well, we'll look forward to that. Any final words, Colin?
No, I think thank you for giving the opportunity to present this. I think we should give a lot of praise. I'm very, very impressed with the work what's been done by our technical team. Alex is a great modeler, and he spent a lot of time really putting this together. But more importantly, now we've now got a presentation and a mission, which I think we can share with the market. I sense from the feedback I've been getting is, where are we? Where are these things in space? What are you trying to achieve? All right, you've got 1,000 meters at 0.33. So what? Where does it all fit? And I think that the work what's been done is very good, extremely professional. And they've tied it together. The team has tied it together very, very well. And I think that this mission now is easy to understand. As we put out the news releases, it's easy for our market, easy for our shareholders to actually make their own mental update of where they think we're going. And I'm very pleased to have had this opportunity, and I thank the team for the work they've done. That's my summary, I think.
Well, I'm very pleased as well. I think it's probably the first mining illustration that I've actually understood since O-level. We don't know if you know what O-level is, but that was quite a long time ago. So that's great. I like my super yacht there as well. So on that note, Colin Bird, Jeremy Reed, Dr. Quintin Hills, and Alaik Kubra, thank you very much indeed, and hopefully keep us updated in a similarly enlightening way over the next few months.
Thank you, Zach.
Thank you.
Thank you.